SEBI board has not ended up talking at all about F&O, and this was the big question in the market yesterday. Let's just quickly tell you what they have done before we get to what they could do. So the key changes that SEBI has talked about is qualification for research analysts and investment advisors have been revised. Summary proceedings have been brought in for security law violations. They've expanded the scope of optional T+0 settlement cycle. So that's a positive. Faster rights issues have been brought in with flexible allotment to specific investors and simplified business processes. So this would be a positive as well, because things like the amount of time you have to take to notify the markets has gone up from 30 minutes to 3 hours after you have a key board meet, or if you have to tell the market, this is for companies, if you have to tell the market about any kind of fines, you don't have to tell them immediately, and there is now a cutoff to what the extent of quantum of fine is for when you have to notify the market. A new regulatory framework for new asset classes will also be coming in, and mutual fund light framework for passively managed schemes will be coming in. That's an important one. There's equal rights for alternative investment fund investors, and ODIs will be following the same disclosure norm as FPIs. ODI, of course, is offshore derivative instruments. So this is a more investor-friendly move. But sometimes, so what has not been said becomes more important than what has been said, and Sajid is joining us for exactly that. So Sajid, yesterday the buzz in the market was that post the SEBI board meet, and I know we were all waiting for that press release nearly till 10 in the night, there's going to be a huge crackdown on F&O regulations. Now this morning there's relief that that hasn't really happened, at least from the SEBI board meet, but now you are learning that this process is definitely underway and it doesn't need the SEBI board meet's ratification at all. So it's coming, but maybe in a little bit from now.
That's true. To put it in context, the SEBI board basically, whenever it meets, it looks at regulations which are supposed to be changed, and regulations which are already been notified, which could be anything like the research analysts or investment advisors, what we saw coming in the thing. F&O norms which were put out were part of a draft circular, and a consultation paper was put out on the draft circular. So they wanted the circular to be out so that people are aware of it, that this is a circular which is going to come in, and they wanted feedback on that circular. Circulars by per se are administrative processes, and they don't go to the SEBI board for ratification or any changes or approvals at all. So it's purely an administrative process, and the circular will be notified as and when it is ready. That's what we've been told by some of our sources there. So the whole premise that that F&O would be in part of the SEBI board meet agenda is not was never there, and the circular is coming in, which is there. And SEBI's circular has been very expansive in that sense. It went through expert working committee. The working committee submitted its recommendations to the secondary market advisory committee, and then the secondary market advisory committee submitted.
So that's process. Let's cut out the process, because frankly I think a lot of people who are trading in F&O just want to know, will it happen, will it not happen, will it be the top 7 proposals? Okay.
It is coming.
Winter is coming, and SEBI's F&O regulations are coming.
The process has already started in some form from today, because you have the true to label charges coming into effect. So there is options tariff by SEBI to by stock exchanges to brokers have already gone up. As part of that, the second is STT changes are coming, has gone up. So in STT you saw options, STT on options going up. So those transactional charges which increase the cost for investors have already come into place. Now is the question of the circular which has been there, which includes increasing the strike price, number of the size of the contract from 5 to 10 lakhs now to 30 lakhs. All those things are in the works, and it will be notified as and when it is ready.
Okay. Sajid, I'm just wondering, so let's simplify this, right? For somebody who is looking at this outcome of this meeting, either a trader or an investor, and trying to figure out what is the most important takeaway here from my perspective today. Not that the changes are coming and that therefore they don't need this circular and therefore they'll happen later. Sure, they will. Aaj, today, what is the thing according to you?
From what the SEBI has announced?
Yes.
I would say the movement towards T+0, because they've expanded the entire list from 50 to 500. which basically means over a period of a year or two, we will, it's optional as of now, but over a period of 2, we will go to T+0 from here on. The second thing is that they've introduced something called T+0 for block deals. So, and which basically brings in institutional participation into it. Now remember, the settlement cycle as a whole, the biggest block for them is the institutions, because when we move from T+2 to T+1, we had all the FIs crying, saying that we won't be able to move it. But now it's a way to get them on board. So they have all the block deals. We've seen the kind of block deals that's coming in almost on a daily basis. And if these block deals now go into T+0, then the institutional framework and the backbone which is required for T+0 is getting prepared for that. So it's a slow progression towards T+0. SEBI also said very clearly that as of now, they are not looking at instantaneous settlement, which was one of the proposals at some point in time, because given the technologies are available there. The second thing is on the broker front, 3-in-1 accounts and ASBA. All this is going to impact all the brokers heavily, because the float which was available to them will come down drastically because of this, because the money will now be lying in the bank accounts of the investor rather than getting transferred to the broker.
And of course, like Sajid said, that there are some changes which are effective today itself. What is the timeline of these regulations being notified, you think, Sajid?
Oh, so,
what are you
I'm
hearing?
just taking a guess here. The point is that if, and it's hypothetical as of now, if tomorrow SEBI puts out the notification or notifies the circular, the exchanges will have to do it gradually, because the contracts for the next 3 months have already been issued.
Yeah, but SEBI needs to take the feedback first.
The feedback is done. The feedbacks are completed in August. So it's a it's a collation of feedback and the notification which is required now. So it would be a 3 months process which we are going to see. And if they notify in the next 1 week or so, you expect that the January contracts would be implemented in such a manner that the cost for retail investors to trade in options are going to go up drastically.
Okay. Now, a couple of things which are happening from today in any case, and part of what Sajid also messaged, said right now. One is true to label charges. So, NSE and BSE has revised tariffs in line with true to label norms. Tariff is reduced from turnover based to flat tariff structure. So, that's a positive impact on NSE and BSE earnings. But remember, that means that those who are trading in these categories have to pay a little more. So exchange charges by large and small brokerages now come at parity, and revenue of exchanges are likely to improve. The second is a hike in STT rates. So the government hiked this in the budget. Increase for futures is from 0.0125 to 0.02%. That also kicks in from today. Increase in STT for options has gone from 0.625 of option premium to 0.1% of option premium. And costs for traders, of course, rise. The third is taxes on buybacks to be borne by shareholders. These were being borne by companies. So companies were paying buyback tax at 24% currently with no tax burden on investors. They're now treated as dividend and taxed at slab rates as well. So these are some of the changes which are coming in any case.